I want to share with you something today. The advantages of being a business owner as opposed to being an employee. I apologize in advance if this upsets you, but you must know this stuff, okay? This is very, very important. There's a reason why the taxes are different for business owners than they are for employees. And that reason is, the better the business owner does, the more employees they're going to hire. And small business keeps our economy going. So it's a two-tiered system. We've heard all about it with the tax cuts and everything else. So I want to share this with you and explain to you the difference. So let's go take a look at this, okay? On the left here, I wrote this out on my whiteboard. I'm going to zoom you in a little bit so you can see it a little bit better. Oh, that's good. If you take a look at the regular employee, we're going to do the employee first. All things being equal, the employee makes $100,000 a year. He's on a 28% tax bracket. Now there's difference, okay, in different states, but I'm just using the basic 28%. Okay, it's $28,000. The government gets paid first. So you, the employee, ends up with $72,000 left. That's what you have to live off of. Now you have, let's just assume you have $2,000 a month rent. It's going to cost you $24,000 a year. Incidentally, when you're paying rent, that's taxable income. You're going to pay tax on it. So that's where that comes in. So you get $24,000 a year in rent, $5,000 a year in food, $6,000 in car payments, $5,000 in insurance, $5,000 a year you're going to spend on vacations, and you have another $25,000 in miscellaneous. Maybe you got educational bills, you got who knows what it is, credit card charges. Okay, so what you end up with as an employee, after making $100,000 a year, the government gets paid first. You end up with $2,000. Now let's take a look at the business owner. I'll move you over here a little bit. Now for the business owner, all things being equal, $100,000 income, gross income, okay? So it's the same. You have what's called the cost of goods sold for a business owner. So that's whatever it costs you to sell that product. If you're selling a service, the cost of goods sold will be a lot less than if you're selling, say, food. If you have a restaurant, cost of goods sold is significant. But all things being equal, I'm going to use a 28% cost of goods sold, because that's somewhere around in the middle, okay? It's $28,000 cost of goods sold, so you have a gross profit of $72,000. The difference, I want to point this out, the government got paid up here. The government hasn't gotten paid here yet. Okay, pay attention, this is important. So you have rent, okay? I'm going to assume if you don't have an office, you're going to work out of your house, so you're going to be able to write off half of your rent, okay, as a business expense. So you have $12,000 that you're going to write off. Food, you can only write off half as a business owner. You can't write off the whole thing, but you can take half. Of course, you can. There's a little thing you can call advertising and promotions. You can write the whole thing off, but we're not going to get into the minutia here. This is broad stroke. Your food, $2,500. Your car, $6,000. Insurance, $5,000, the same as over here. Vacation, you're going to go on a $5,000 vacation. And you have etc. You have other expenses as a business owner. You got another $25,000. All things being equal, at the end of this, you have $16,500 in taxable income. See where the government's going to get, as a business owner, going to take 20% because they just did the tax laws. Government's going to get 20%, which is $3,300. Here, as an employee, the government got $28,000. Here, the government only got $3,300. So you have, in all the end of it, as a business owner, you have $13,200 left over. So for the same amount of money as an employee, you have $2,000 left over. As an employer or a business owner, you have $13,200, and doing the math, you have, as a business owner, $11,200 more in your pocket as a business owner than as an employee. Now, I'm not telling you to drop what you're doing and go become a business owner, okay? And this is just broad stroke figures. This is not accounting advice. Go see an accountant. He'll back it up, what I just told you. But see him and hear it out of his mouth, not mine. I'm not an accountant. I'm using this as an example. You may seriously want to consider buying a business so you get paid first. Pay the government, pay the taxes last. And if you like a job, keep it. Buy a home-based business. Get involved in a MLM company, or buy a home-based internet business, something like that. Buy your significant other a business so you can take these write-offs. Because if your business is showing a loss, you can deduct it from your regular income. That's the advantage of owning a business for yourself, my friends. You want to be a business owner because the government gets paid last, not first. Does that make sense? Again, this is not tax advice. See your CPA. Talk to your tax advisor about this. But this is a broad stroke example, and this is real life examples, by the way, why you want to be in business for yourself. Thank you for your time. I hope you got a lot out of it. And I hope you didn't get upset about it. I'm just telling you the truth, telling you the way it is. Thank you. I'll see you on the next video.